Hello, everyone. This is Zak Gardezy. I'm the founder of Wealthstone, a private wealth management firm based out of Scottsdale, Arizona. I'm a certified financial planner and a private wealth advisor. So, here on Money Minutes, I share the latest market headlines and my outlook for what's ahead. So, for this week's episode, I'll be covering the latest earnings report from Nvidia and what this means for artificial intelligence. I'll also talk about the latest on tariffs and whether or not a U.S. judge has struck the tariff strategy down. And lastly, I'll be talking about the latest updates on the overall economy, focusing on inflation and some of the soft data that we recently received. So let's get started. So Nvidia released earnings on May 28th, and Nvidia is now the most valuable publicly traded company in the entire world. And so they're worth over $3 trillion. And arguably, beyond the fact that they're such a large company, they're extremely important for the overall health and direction of the stock market because it not only makes up a large part of the S&P 500, but artificial intelligence itself is basically powered by Nvidia products. And so if Nvidia is doing well, you can make the assumption that artificial intelligence overall is doing well. So this earnings report is extremely important and many investors pay very close attention to it. So what happened with Nvidia's earnings report? Well, frankly, they knocked it out of the park as was expected. So they beat analyst expectations on earnings per share, on revenue forecast. They shared a very positive outlook for artificial intelligence and Nvidia overall. And in addition to that, their data center business grew remarkably at over 73% year over year, which is data centers are where artificial intelligence lives. And so if that part of their business is doing so well, it can only point to continued momentum in artificial intelligence. So overall, if you're an investor heavily invested in tech, artificial intelligence, if you're a Wealthstone client with a large allocation invested towards Nvidia, this was a very good earnings report and gives me a lot of confidence in terms of where we're invested and where we're headed overall. So great news from Nvidia. So there's a lot of drama happening in the tariff world. And frankly, tariffs have been the headline for at least the last month or so. So what's going on, right? We have tariffs being put on, tariffs being taken off, increase, etc. Well, recently, a U.S. judge, this was actually on May the 28th, a U.S. judge decided that the president overstepped his power under the International Emergency Economic Powers Act, where this judge believes the president did not have the authority to put basically a broad tariff, a 10% tariff on every single country in the world. This particular act, according to the judge, is supposed to be used for national emergencies. And the president has to be able to clearly define what national emergency is going on. And so I can see now where this is going to turn into a hotly contested legal debate. And as I was even thinking about making this segment of the video earlier today, a headline popped up which said an appeals court is now staying or pausing the decision from the lower court, allowing these 10% tariffs to continue. Now, what's important here is that the debate is still ongoing. The decision whether or not to keep or remove these tariffs has not been made yet. So you may be wondering, well, why didn't the stock market just take off today, right? Like we woke up this morning with the 10% tariffs removed and possibly the entire tariff agenda going down the tubes based on the decision of this judge. Well, that's because the market, in my opinion, didn't really believe that this is where the last decision will be made. Typically, what happens is a decision is made by a U.S. judge that can be appealed, goes to an appeals court. That can be appealed and then goes to the Supreme Court, where the Supreme Court can decide whether or not they take up the case or they just run with the appeals court or lower court's decisions. And so ultimately, I believe this will head to the Supreme Court because we're dealing with a question of executive branch authority. Does the president have this power to put these tariffs on? Does the president have power to put tariffs on at all, right? Or is that supposed to be a power of Congress? Who has this authority? And that's where the Supreme Court will have to step in and make a decision. But as an investor, this is a tough period to be in because this decision from the Supreme Court or the appeals court, or as it moves along in the court process, this can take a very long time, and we're going to get all these headlines, tariffs being put on, tariffs being put off, and so it's going to be very volatile. And so ultimately, what I believe will happen is that, again, it'll go to the Supreme Court. I have no idea what decision they're going to make. You can make the argument of what political party the Supreme Court is leaning at this period of time, but even that hasn't been a reliable estimator as to what decisions they're going to make. So at this point, my guess is that we are not going to see a clear end to the tariff policy based on a court decision or court actions. I think that'll take a long time. It's good for the executive branch and other branches of government to know what their authorities are. Let's let that situation play out. But as far as what happens with the trade policies, I think that gets sorted out through negotiations. And by the time it goes through the courts, a lot of these tariffs may already be removed. And so we'll have to see what happens. But the best way I can put it is there's a lot of drama going on in the U.S. federal government, and that's not slowing down anytime soon. So what's going on in the U.S. economy? We're going to focus on inflation. And I also want to talk about this debate going on between soft data and hard data and where we're headed. So the latest inflation data is actually showing us that inflation is slowing down. Now, this is based on a consumer price index CPI report that was released earlier in May, which was reflecting data for the month of April. Now, there's a very important inflation report coming out on May 29th, which is Friday. This is the PCE report, Personal Consumptions Expenditures Report. This is the Fed's preferred gauge for inflation. So the Federal Reserve, when they meet to decide whether or not they're going to increase or decrease or what they're going to do with interest rates, the PCE report is something they look very closely at. And so the current analyst expectations are that PCE is actually going to reflect cooling inflation. And so that's good news, but surprises do happen. So we'll have to see what's actually released tomorrow. Now, there is this debate going on of soft data versus hard data and what this means for the economy. Now, soft data is typically things like consumer confidence scores and manufacturing surveys and really more of those types of data points, which could change, right? They could change frequently. Hard data are things like the unemployment rate. It could be the CPI that I've talked about, which is an inflation gauge, or PCE, another inflation gauge. And so typically the belief is that soft data flows into hard data. So we've had some very negative soft data as these tariffs have rolled out and some of the trade rhetoric. Consumer confidence scores were at some of the lowest we've seen in a very long time. And so what has happened since? Well, we've had some easing of trade rhetoric and even some concessions between the U.S. and China and bringing down their tariffs. Consumer confidence has skyrocketed back up. So that's a great thing, right? And so I personally believe that the health of the economy and the direction of it is squarely going to rely on what happens with these negotiations with tariffs and other economic policies that the government is coming out with. There's also an element of the legislation going through Congress now, which covers everything from spending and taxes. And so that does have an effect on the economy. But ultimately, what investors are focused on is tariffs, because those have an immediate impact to the direction of the economy. And so if these tariffs get removed, you could expect the soft data to just go sky high. Economic data should follow the hard data. Stock market will react very positively. Some of these negotiations falter, or maybe certain deals aren't met. Remember, there's a 90-day pause on tariffs. There was a recent threat from the Trump administration to put a very strict tariff, a much higher tariff on the European Union. The European Union came out and said, look, we'll actually let's meet soon and try and negotiate a good deal. And so there's a lot going on with tariffs and trade policy. So investors can expect lots of volatility. And so this really supports the idea of just find, based on your financial plan, how you should be invested, stick to that strategy, and the old rule of just staying invested in the market and riding out these storms. As long as you're positioned well, appropriately, and in high quality stocks, you should come out very well at the end of all of this. But if you're worried about risk, or if you feel like your portfolio is not positioned correctly, please don't hesitate to reach out. I'd be happy to have a discussion with you. And this concludes this week's episode of Money Minutes. Thank you so much for tuning in, and I hope you have a great rest of your week.